It's the last edition of Business Morning for this week. Welcome and thank you for joining us. I'm Chimeze Obi Iwago. As electricity consumers gear up to pay more for electricity come September 1, the federal government has mapped out strategies towards providing better services for the consumers. The NERC says that the tariff reviews going forward will only follow service-based principles where DISCOs will only be able to review tariff rates for customers when they consult with the customers commit to increasing the number of hours of supply per day and quality of service. And so there won't be any arbitrary tariff increase. In addition, the president has also directed that there should be a nationwide mass metering program in an effort to put a stop to estimated billing for electricity. He also approved a waiver of the import levy on meters so that those that do not have meters can be supplied as early as possible at reasonable costs. Well, joining me now to speak more on this latest development is a special advisor to the president on infrastructure, Ahmad Zakari. Thank you very much, Mr. Zakari, for joining us on the program.
Good morning, Chimezi. How are you?
Very well, thank you. So, what is driving this renewed optimism by the federal government in the power sector? The government now wants to urgently implement the cost-reflective tariff, which has been long clamored for by investors, and also bring in measures supposedly aimed at protecting the vulnerable consumers.
Well, I mean, that's a great question and very timely in terms of what the federal government is trying to do. The NERC, the Nigerian Electricity Regulatory Commission, set out some guidelines and also communicated some conditionalities in terms of what President Muhammadu Buhari had directed the infrastructure on the power sector and the responsible parties to do. When we look at a sector that is so critical to the development of our country, we need to make sure that the structure in which the economics of that sector work, on one hand, allow investors to recover their costs so that they can continue to provide service, but on the other hand, most importantly, that consumers and customers are protected. So the main thrust and the new optimism is because, you know, the EPSRA Act, which is the Electric Power Sector Reform Act, mandated that before any adjustments happen in terms of the commercial relationship between distribution companies and customers, that consultations happen. So the consultations that occurred earlier this year that were monitored by NERC, conducted by the DISCOs with the consumers, really came out with the feedback from Nigerians that they will not pay for darkness, that when services are there, Nigerians will pay. When they're not there, they don't want to pay. And this is why this new move into service-based principles, where the DISCOs have to commit to a level of service that will be monitored before they're able to make adjustments in their commercial relationship with the consumers.
Now, talking about the cost-reflective tariff, there is a belief that this move is as a result of the condition given by the World Bank before Nigeria can have access to the $1.5 billion loan. Is that what it is about?
No, look, I think Nigeria is for Nigerians, and we make our own laws, policies, and decisions. The main thrust of this was we've been reviewing the situation on the electricity market, and you can know that NERC has made certain pronouncements about the desire to move to a more cost-reflective regime. And there were announcements as far back as September, then in January, and then most recently with the deferral of the April 1st tariff, structure that was intended to come out, which was going to be for everyone, regardless of the quality of service that you receive. The president, very concerned about ensuring that Nigerians are treated fairly, began to review and ask questions around, if you're going to ask people to pay, are they getting the service? Number one. Number two, are the poor protected to ensure that the conditions on Lifeline tariff are there? And number three, do they have the right infrastructure for billing and metering? So you saw the capping regulation come out that put a stop to arbitrary estimated billing. And then now you're seeing this move towards estimated to a service-based regime for electricity reviews going forward that is just fair and equitable for all Nigerians. We don't take instruction from any foreign power. We're a sovereign nation. This is something that was done in the best interest of Nigerians to ensure that we have a sustainable power market going forward.
Right. Now, the government says it wants to put a stop to estimated billing. If I may ask, is estimated billing a taboo, really, or are we talking about crazy billing here? Because these are two different things. Estimated billing is actually a method of billing where if you don't have a measure to determine the actual price of something, you can actually give an estimate. So if you say no to estimated billing and not everyone has been metered, wouldn't it lead to wastage, and who bears the costs?
So I'll separate that question into two segments. So I think you rightly said estimated versus crazy billing. What the capping regulation from the NERC outlines is that I cannot have a two-bedroom house in Kuje and I have a meter. And there's 10 other houses in that same Kuje that have meters and they're the same structure. And the people that are metered, on average, they consume maybe 5,000 naira per month. And then the houses that are not metered, they get a bill for 20,000 naira. The capping was instituted to eliminate what we call estimated arbitrary billing, or what you refer to as crazy billing. It ensures that you cannot get a bill that is not based on facts and the consumption around your area. Now, this has been, quite frankly, something that we believe was at times being used by certain distribution companies to not have an objective measure to what it is that they build consumers. So the capping regulation essentially eliminated estimated arbitrary billing and put sanity into it. And what the president has mandated is that there should be a full enforcement of this capping regulation that the NERC had put out. Now, furthermore, in terms of metering, when we think about anyone having cause to complain about their electricity bill, it is because they don't understand what the relationship between what they consume and what they're billed. A meter eliminates any arbitrary estimation. It ensures that the consumer feels very comfortable about the transparency of what they're charging. So to fully get rid of this risk of consumers feeling cheated, the president has mandated that working with the central bank that we embark on a mass metering scheme which is broken into two pieces. One is the president approved a waiver to allow for zero duty on meters. This will help with we already actually have meters at the ports that have been stuck because of some misalignment between the price on landing and the customs duties that were applied to them. That will resolve, and you will see a flood of meters that are already in Nigeria coming in to be installed. Furthermore, we at the federal government are making $200 million plus available through a partnership between the Central Bank of Nigeria, and we're having discussions with the World Bank as well, where we will bulk procure meters in partnership with the discos, and then they will go out and install those meters, and the repayments to the federal government will be done over time via the discos. So, and we estimate we're going to bring in 4 to 5 million additional meters between the next 12 to 18 months, but this will be a ramp up. You'll start to see impacts of this, as I said, as we clear out things that are already, meters that are already at the port. So, we're at the federal government working very closely with NERC, the Federal Ministry of Power, Central Bank of Nigeria, the Federal Ministry of Finance, and the Customs Service, embarking on this very aggressive scheme, because we believe that only with mass metering are you going to be in a position where customers and consumers that are being billed feel very comfortable around what they're paying.
Right. I will still take you up on that issue of metering, and particularly the importation of metering. But then we understand that the proposed tariff increase targets mainly the rich. Is that a long-term viable policy? How can it be practically effected?
So I think what the analysis and the data has said is, if you look at more affluent communities and locations, they're mostly metered. Go to an Ikoyi or VI, Asokoro, Metama, and other GRAs and industrial areas around the country, that there's been, unfortunately, a focus on metering those areas, partly because some of those areas people have acquired their own meters through the upfront payment. Those locations are metered, and they're getting a high quality of service. Some locations have 20 hours, 18 hours, some even up to 23, 24 hours a day of electricity. It is not fair that somebody, let's say in my neck of the woods, in Jigawa, maybe in Nkwashi local government area or Kazori local government area, that is maybe receiving 4 or 5 hours per day, should be paying the same rate as someone in these other areas that is receiving a very high quality of service. So through the order that the Nigerian Electricity Regulatory Commission has put out, anyone receiving less than 12 hours per day, as well as the underprivileged that are on lifeline tariffs, what we used to refer to as R1, they will be protected. We then will look at a review of the tariffs based on service principles when the discos have consulted and engaged with those clusters that are getting a high quality of service. They will work out and communicate the tariff rates that those will work on with supervision from the regulator. So essentially, this structure is more equitable. In the past, we've just had tariff reviews that impacted everybody the same across the board, regardless if you were in an area that is receiving very poor service or an area that is receiving a high quality of service. This incentivizes distribution companies to improve their services, to be able to now achieve cost reflectivity for the whole nation. But
now,
one careful thing to think about is this is not intended to cause a distinction between the haves and the have-nots. The regulator has asked for performance improvement plans. We're not saying that places that are getting 4 hours, 5 hours will stay in perpetual darkness. There's regulatory documents submitted by the distribution companies that are called performance improvement plans that will ensure that they're improving service for everyone across the nation over time. But until they do that, and if they don't do that, they'll be sanctioned. But until they do that, we are not allowing for any reviews in the tariffs for those customers that do not feel that they're getting a high quality of service.
Now, how much of consultation did the government have with the discos before coming up with these measures? Now, these people have invested and, of course, deserve to also be protected. Don't forget, electricity has improved to a very reasonable extent. Now, does the government intend to honor the privatization agreements and protect the investments of its citizens?
Look, the tried and tested model in terms of driving quality for customers and improvements is having a market that is based on contracts and market principles, right, with the right regulatory oversight. The federal government has no desire to not meet its side of the commitments. And we're also working to ensure that the distribution companies meet their sides of the commitments. Through the BPE, who has the mandate for the investment in the discos, and through numerous engagements, we've been meeting with discos at the management and ownership level, I'd say for maybe the past 3 to 4 months on a weekly basis. And everything that's being done is being done in partnership to ensure that government feels that Nigerians are protected and Nigerians are getting the right quality of service. And some of the practices, such as estimated billing and the lack of transparency that we've struggled with, we keep the discos accountable. And they've also made it clear that there are a number of measures that they think will support them. But as I said, government coming to the foreground with financing support. As you know, we for the bulk metering, government coming to the foreground with the Siemens PPI initiative that is also supposed to support discos with investment, and the advanced discussions that we have with the World Bank and Africa Development Bank on a low-interest distribution, rehabilitation, and expansion program that will be monitored through the Ministries of Power and Finance with the discos to ensure that they are getting the investment. These are all measures that the federal government is taking to ensure that this challenge of perennial underperformance from the power market is set to be concluded within the life of the Buhari administration.
Well, Mr. Ahmed, you just have to hold your thoughts there. We'll come back to you briefly after the break. Well, we'll take a break. When we come back, we'll still continue with this conversation and, of course, look at the manufacturing sector and its performance in the second quarter of the GDP numbers. Just stay with us. Welcome back. Thanks for staying tuned. We're still looking at the power sector and the recent developments there. And I still have in our Abuja studio the Special Advisor to the President on Infrastructure, Mr. Ahmed Zakari. Thank you very much, Mr. Zakari, for sticking on there. Right. Now, in fact, while we were on break, I was getting some tweets and complaints from consumers. I mean, why should the government be talking about increasing tariff at this time, considering the situation we all have found ourselves, the COVID-19 pandemic? Nigerians are still reeling in the effects of the COVID-19 pandemic. Shouldn't tariff increase be a gradual thing?
That's a great question. And that's why we've tried to ensure that there's an understanding. This is not a tariff increase. Federal government is not interested in a tariff increase on consumers. What we're trying to do is to ensure that there is more transparency and more equity in the power sector. People that are receiving a high quality of service and are metered, they should have an opportunity to consult and engage with the distribution companies that, as a consumer and a provider relationship, determine what is reasonable. Consumers that are not getting service should not be charged or should not be subject to reviews in their relationship with the distribution companies and the service providers until that happens. And ensuring that the system of estimated billing that Nigerians have complained about is eliminated. And then ensuring that, most importantly, individuals that are less privileged through the Lifeline tariff have a maintenance. So this is essentially a change in the structure of the market to ensure that the relationship between service provision and what one pays is more aligned. But to insinuate that this is some tariff increase, I think is a bit raising some concerns and trying to encourage people not to understand the crux of the details of what we're trying to do. And this is why having these engagements and ensuring that the Nigerian Electricity Regulatory Commission and the Ministry of Power and others in government are communicating what consumer protections are that we're moving to, and then ensuring that we're allowing an environment where distribution companies are engaging directly with consumers to ensure that they get compensated for the service that they're providing, but only tied to improvements in service or where they're receiving high quality of service now. And as I've stated, this is nothing different than what consumers, through the mandated law that requires consultation, happen. As I stated before, there was a path that we were on that was going to raise tariffs for everyone in April. Government said that no, that's not something we think is justifiable. And NERC said this is not what we heard from Nigerians. And this is really just implementing exactly what came out of the reviews and the consultations, where Nigerians said, we're happy to pay for services, but we're not happy to pay for darkness. So we're trying to implement the desire and wishes that there's more equity in the system, but at the same time, put in the protections through mass metering, through an end to estimated arbitrary billing, and through protections of the poor, while we allow the market through the discos and the customers to have a relationship that is governed under the regulators' very strict oversight.
Well, Mr. Zachary, I wish we had more time to dwell on this conversation, but we really don't have that time. Thank you very much for coming on the show. Ahmad Zachary is the Special Advisor to the President on Infrastructure. Thank you very much for your time.
Thank you.
And of course, the manufacturing sector is another sector that took a hit from the coronavirus pandemic. The sector's growth contracted by minus 8.78% in the second quarter of 2020 from 0.43% in the first quarter of the year and 0.13% in the second quarter of 2019. Well, to speak more to the data is the Acting Director General of the Manufacturers Association of Nigeria, Mr. Ambrose Oruche. Thank you very much for joining us, Mr. Oruche.
Thank you for having us.
Well, you've been listening to that conversation. I want to start with that electricity issue because it affects you and your members.
That's
so
true.
What's your take in all of these initiatives that the federal government has just come up with in the electricity sector?
Yeah, from our side, because we always have been agitating for status quo in terms of price, although the discourse most times will talked about cost-reflective tariff. Yes, we had discussions with discourse in the March period before the pandemic really took over, and we insisted that, look, we can't pay for darkness. That does not mean that we'll pay higher tariff. Until you give us light, we'll now see the light, we can now pay. We can't pay on promise because we don't know, there is no strategy that this promise will be achieved. There's nothing on ground to show us that this promise that we are making, that when we pay higher tariff, we'll get light. We have not seen it. That's why we insisted that, that we're not going to pay higher tariff. It's supposed to take effect in April, but the National Assembly came and said January. We are surprised that they are going to implement it in September. It was
for you, it came as a surprise.
Yes.
And how do you think that would impact businesses for you?
We are talking about GDP, contribution of manufacturing to GDP, which has been dropping. And now the price of electricity is now going to go up. You and I know that once that's done, the price of goods will go up because the producers will not absorb all this price. And what will happen, the consumers will not be able to purchase because inflation will go up. And then in the process, many of manufacturing companies will shut down. Don't forget that from our studies, energy is about 40% of the input used in some sectors of the manufacturing. So if you are increasing the price of 40% of the cost of the production, that means that the price of the product will go up, definitely. And there is an irony in this Nigeria electricity tariff where the higher you consume, the higher tariff you pay. Instead of the higher you consume, the lower, taking advantage of economic of scale. That is not happening in the MITO we are implementing. So those that consume higher energy pay higher. They subsidize the ones for residential, and that shouldn't be, And we have been clamoring for a reversal that the more you consume, the less your tariff should be.
Now, well, we know, talking about looking inwards now, yes, the metering thing. Meters are imported, and here we have issues of foreign exchange, which has also impacted manufacturing businesses, which, of course, led to this contraction that we saw in the second quarter of the year. Do your members have the capacity to actually produce or manufacture these meters here rather than import?
Yeah, our members have the capacity. Capacity is built over a period of time. Now, I read from, I think yesterday, that government is going to waive the 35% adjustment tax on meter for people to bring in meter. That's a discouragement. It is incentive for manufacturers of meter locally. Why not give these people funds to be able to produce the required number of meters that is needed by Nigerian consumers instead of importing? We are talking about unemployment level. So what we are doing now is to import poverty to Nigeria and export employment. So let's encourage local manufacturers so that they can build more capacity, employ more people, and be able to satisfy the disco's demand for meter. We have so many of them, and more are coming up to meet, because once you incentivize some, more investors will come in.
Okay, now we know that the lockdown issues and all that are part of the issues that affected the manufacturing GDP for the second quarter. Now, resuming operations after the lockdown, manufacturers have had to deal with a new normal. So what changed in your operation, for instance, where you source your raw materials?
Well, let me still let you know that not all manufacturers have come back fully, because the curfew is still there, 10 to 4. That means that not all of them can operate their machine within the time allowed. because some machines have to run consistently throughout the 24 hours if you want to break even from your production. So what happens is those ones have not yet come to operation. They are still waiting for the curfew to be lifted, And you also agree with me that curfew prevented the hospitality industry from operating, and that is affecting those that are dependent on hospitality industry to patronize them, for them to continue to remain in business. So be that as may, having said that, I will look at looking inwards is not what you do overnight. It has to be, it's a process that you have to start somewhere. And it takes funds for you to backward integrate. And it takes, for you to be incentivized to backward integrate, government has to come in. What is government putting on the table? Today we are talking about the capacity of cement has increased greatly. What did government do? Government incentivized those that are importing cement then, and then ask them, come back and start producing while we give you license to import for a period of time, and then from there you build their capacity. Many of them jump into it and they build their capacity. Today we are talking about becoming exporter of cement and no longer net importer of cement. The same thing can happen if we want a backward integration. It's not what you do overnight. It has to be a process. You have to have a timeline. You have to plan towards that. And then don't forget that most of the raw materials producers overseas, have is in commercialized quantity. Can we produce in commercialized quantity in Nigeria? Who will patronize? It becomes difficult for some of the raw materials we produce here. That's the challenge.
Now, of course, another issue is the issue of the foreign exchange. We've seen what is happening.
Yes.
There. How have you been dealing, with that?
It's a major challenge. I must tell you, it's a major challenge. And if nothing is done in the next quarter, many industries will shut down because many cannot get the raw materials because Forex is not there. Imagine a company that requested, that bidded for $20 million and was given $2,000. What will you do with that? It's not how many trenches of that will you go to be able to import your raw materials to remain in business. So we are asking central bank, like we did in 2016-17, we have recession. Central bank prioritize, give 60% of the Forex available to manufacturers. That's why we are asking that system, that policy, be returned back. Let manufacturers have 60% of the Forex available for them to import their raw materials. In this way, it will encourage them to continue keeping the employment and then also employ more people, like what I'm...
The central bank recently placed a ban on FX payment to third parties from M. And your members are kicking against that. Why?
Well, I think in that aspect, the discussions are ongoing with the central bank on how to resolve the issue. I will not say much about that policy because we are discussing, hopefully.
Now that the CBN has already announced the resumption of exchange rate sale to BDCs,
yes.
How is that going to impact your businesses?
Yeah, small-scale people can now have access to Forex at official rates, to transact business of $20,000, $10,000, sort of. So there is going to boom. Business is going to come back for the micro industries to continue being in business. It's a good development because it will also reduce the pressure on Forex, on Naira, because as a black market, 475, 480 is not the best for the economy. So selling to the BDC will now bring down the cost at least to 386 or 390 thereabouts.
Now the land border has remained closed, and of course, many...
I expected the question.
Yeah, many have been calling for its reopening.
Yeah.
What's the position of MAN?
Well, when you analyze the issue of the land border, it's over a year now that the land border was closed. You will see it has a mixed view of performance. Some say it's good for them. Some say it's not. It's affected them negatively. Now, what we are saying is, look, we need to review the entire thing? Have we achieved the purpose the border was shut down in the first instance? If not, let's open the border, because border closure is not sustainable over a period of time. You know, also you will agree with me that AFCTA will take off in January, and most of the goods Nigeria will export through the border, Nigeria will also import through the border. The border closure has impacted on exporters. That's why we are having more challenge we're having on Forex. It's also impacted importers that import raw materials from our neighboring countries like Ghana, Togo, and the rest of them. They can bring in. If you want to take it through the ship, through the sea, air, is expensive. Through the ship, what takes you an average of 6 hours to get it to Nigeria will take you 8 weeks. If you have to take it through the air, the cost is more than 10 times what it ought to be through the road. That's why we're asking government, let's review this land border. It's not helping. It's not what can be sustained over a period of time. There's need to review it and put measures to checkmate what we wanted to achieve before. If it's smuggling, yes, what measures can we do to stop the smugglers? You know, all this has to be discussed among the stakeholders.
Now, in all of these, what is the outlook really for the sector?
For the third quarter, the outlook is still very negative. It will still come down low because you have mentioned policies in the economy that is affecting manufacturers negatively. You know, as long as these policies are allowed to continue, you know, things will continue to go bad. I'm not a prophet of doom, but, you know, but looking at it, forecasting it, you discover that it will not get better. You know, when you can't get Forex to import your raw materials, you know, which cannot be developed overnight in the country, and the rest of them. Then the tariff issue that is going up in September will also impact negatively on manufacturing performance.
Yeah. Now, your CEO's confidence index for the first quarter of the year fell below the 50-point benchmark. Do you think the manufacturing sector needs a kind of a lifeline to recover? And if yes, what sort of lifeline should
we are talking about bailouts. We need bailout funds to survive.
Like how much?
We don't need intervention funds. What we need is bailout, grants, you know, for them to continue remaining in business. You know, some of them are finding it difficult to pay workers. They are finding it difficult to pay. Why not government come in and says, okay, for 6 months from April to, let's take off your employees' salaries as a bailout funds for you. So I continue to be in business. You know, we have not determined the quantum of money we need, but we need bailout. Intervention comes with interest. And we have many of them cannot access the CBN intervention fund because they have overhang of debt with other commercial banks. So what happened
we had the 100 billion naira, the 50 billion. How much of that did your members
Well, for the 50 billion was for SMEs and households. Our members did not participate. Well, we didn't get much from it.
There are some manufacturers, of course, that are within that
small
and medium
some.
enterprises.
Even those that we send the applications through us, we are not granted. They didn't get. Because we have a business unit that compile the list of the members that are in need of such low amount of 25 million, and we send to the microfinance bank. They didn't honor it. So the 100 billion for pharmaceutical and the healthcare, I think our pharmaceutical companies are getting it. Then the 1 trillion is the one we are looking forward to when government begins to disburse, because that's where many of manufacturers that needed huge capital for diversification, for retooling, and then for change of production line will benefit more.
All right. Thank you very much, Mr. Oruche, for coming on the program.
Thank you for inviting us.
Ambrose Oruche is the Acting Director General of the Manufacturers Association of Nigeria. We'll take a break, and when we come back, we do an opening call to London, and of course, back here, we look at the markets. Do stay with us. And for updates from the streets of London, Juliana Olanka joins us now. Good morning, Juliana. Well, Jerome Powell yesterday paved the way for years of more pro-growth policies by softening its approach to inflation. How are the London markets reacting to his speech the morning after?
Good morning, Chimuze. Well, I've got to say it's pretty muted reaction on in London. The FTSE 100 opened 0.3% lower. The FTSE 250 opened 0.4% lower. And I think really that's because what traders here wanted was a more broader vision of the US economy. I believe Jerome Powell, Fed Reserve Chair, spoke a lot about inflation rates and, keeping it above 2% when it is above 2% and to mitigate against all the times it's been running lower. Don't think that was enough to stimulate traders here, though I've got to tell you big news about the Japanese Prime Minister Shinzo Abe and his surprise, shocking resignation. That's moved markets, particularly the Nikkei 250, which completely slumped at the announcement of that. Of course, Japan is the third largest economy in the world. So that's a big, big story that I'm sure we'll be chewing over later.
Absolutely. We'll keep a tab on that. Now, British Gas is to pay out a total of about £1.73 million for failures and the way it handled a switchover of payment provider for its repayment customers. What will this mean for British Gas balance sheets?
Oh, well, it means it's lower, but by £1.7 million, and they've got a slap on the wrist by the regulator Ofgem. This dates back to December 2019, when Britain's largest energy and gas supplier decided to change how people who prepay for their gas would be paying for it. It went from pay point to pay zone. Customers complained because they weren't told, or those who were told on the day of the switchover. So when they tried to pay their usual way, they were told at the post office or wherever they do that payment that it was no longer viable. Of course, for many customers, this left to them being without gas for at least 24 hours. And when they did try to contact British Gas, the customer service line was down. This affects 270,000 customers. And as you said, £1.7 million has been paid out in reimbursement.
Of course, workers will be encouraged to return to the office as part of the major media campaign to be launched by the government next week. WPP report says only 3% of UK staff regularly work from office. Why? Why are people reluctant to go to the office?
Well, to put it quite simply, Chimuze, people were scared to die of coronavirus. I think let's not forget that Britain has had one of the worst death rates in Western Europe. I know the numbers have been revised, but it's still just short of 50,000 deaths. And Boris Johnson and his coronavirus campaign of stay at home, work from home if you can, really resonated with people, and they're just not prepared to go back. There's a big debate in the British media at the moment about this new campaign, which I believe is going to be kicked off on Monday. People are not happy that they're having to decide whether to pick their health or to pick the economy. I believe that, previous messages about save the British High Street or save your work office space is just not good enough. The Labour opposition want the British government to look at this in a more holistic approach rather than forcing people back to work. In fact, some people are saying, the campaign is saying, if you don't go back to work, you will lose your job. So it's a delicate balance. But to answer the question succinctly, it's really because people are still very much afraid and they don't feel as if workspace environments are safe enough from the deadly disease.
Well, health is important, but we still have to work. Anyway, Juliana, keep tracking the numbers. We'll get back to you for updates later in the day.
Thanks, Chimuze.
And back here for the markets, Temple is here. Temple.
Yes, Chimuze, thank you so very much. Yesterday, we saw the markets breaking the 7-day consecutive sessions of losses in the market. Was down by some 0.10%. Of course, that's due to some sort of decline in Dangote Cement and a couple of other major stocks that we have in the market. And we saw equity capitalization dipping all the way from 13.214 trillion naira to 13.203 trillion naira. Now, look at the activity level. It was positive yesterday by 39% in terms of volume. UACN was the major contributor, 111 million units of its shares traded. And you got value at 1.57 billion naira. That's just 17% increase in compared to what we did in the preceding session. Now, look at the numbers, look at the colors that we have here for the sectoral performance. Banking stocks down, consumer goods up, industrial goods segment of the market was also down, and of course insurance was positive, while you have no movement on the oil and gas space. We have Mr. Olayinka Tajudeen joining us. He is a stockbroker with Valmont Securities. Mr. Olayinka, given what we've seen in the markets yesterday, the gaining streak, which was bucked yesterday by some 0.10%, what are we likely to have today?
Yeah, what we saw yesterday is just a confirmation of the fact that markets will still remain in a defensive mood until the problem around the currency crisis is resolved. So what we saw yesterday was more of bargain hunting and portfolio rebalancing.
Okay.
So the same thing we saw yesterday will still happen today, and going forward will still be what we see next week. So until the resolution of the currency crisis come into place, we are not likely to see very aggressive movement in the market, either going down or coming up. But we see just short-term profit taking, and this same defensive mood will remain.
And perhaps there will be room for some bargain hunting as well on a lot of those stocks that are fundamentally sound. Thank you very much for your insight, Mr. Tajudeen Olayinka, stockbroker with Valmont Securities. Quickly, let's move on and quickly look at what we have on other sides of the market. For the unlisted securities space yesterday was unchanged, just as we had at the preceding trading session. We remain at 522.99 billion naira. CSCS was responsible for 20,000 units yesterday, while WAMCO was responsible for just 1,000 units in the markets. And in total, you have 407,000 naira worth of transaction there. Both side of the market yesterday was quite positive. We saw investors now continuing to cherry pick, again with concerns in mind that the economic recession is looming, and so everyone is waiting and watching to see how the federal government will respond much better to that. We had 42 deals in total yesterday, 41.33 billion naira worth of transactions in total. Now look at the NCB space of the markets. Got a decline yesterday in terms of yields by some 7 basis points, and of course we got the yields here basically on an average of 3.08%, as investors also continue to cherry pick in this side of the market. We know that in recent times, the asset under management for the PFAs have actually really reduced on this side of the market, given the data that came out recently regarding the holdings of the PFAs in the market. 62 deals yesterday in the secondary space of the market. And of course, let's look at the open market operation side of things. Here, yesterday, we know that the CBN carried out an open market operation. We're yet to get the details of that. I know it's been put out to the analysts and dealers, but hopefully we'll be able to get those details. But look at what we have in the secondary space yesterday. Of course, investors still came back here in spite of the auction that we had in the market. We got 39 deals in total for a value of 38.75 billion naira. We have Dumebi Udenugbam, a fixed income dealer with UBA, quickly joining us on phone. Could you tell us what we're likely to see for the rest of today, the last trading day for this week, and of course, what the week ahead holds for the markets?
Okay, thank you very much. So basically, what we're seeing today, the system was quite liquid as yesterday, and today the system opened about 1 trillion naira yesterday. Today we have about 8 debit and also a retail asset auction.
Okay, not so good a point to actually leave that conversation, but we do hope we'll be able to have Dumebi Udenugbam, a fixed income dealer with UBA, some other time joining us on the program for some analysis. Well, back to you now, Chimize.
Thank you very much. Well, it's the last trading day for the week, so let's just hope that things would, of course, go on right. Of course, we'll always remain positive. Well, it's on that note that we draw the curtain on today's edition of the program, and of course, for the week. Thank you for watching. I'm Chimize Obi Iwagu.